95 Theses.
I want to stick with ride sharing. Lyft is reportedly threatening to sue Morgan Stanley, accusing the firm of supporting short selling for investors pre-IPO. Now, keep in mind the ride sharing company only went public on March 29th, and this letter was allegedly sent on April 2nd. Morgan Stanley is responding to the allegation saying, quote, "It did not market or execute directly or indirectly a sale, short sale, hedge, swap, or transfer of risk or value associated with Lyft stock for any Lyft shareholder identified by the company or otherwise known to us to be the subject of a Lyft lockup agreement." Joining us from LA to break it down is the author of Make It Rain and CNN legal analyst Areva Martin. Hey, Areva, how's it going?
Hey, Melody, how are you this morning?
Yeah, doing well. I mean, this is a mouthful. What are the exact accusations made by Lyft in the recent letter to Morgan Stanley?
Yeah, we know there's fierce competition between Lyft and Uber. These ride-sharing companies have been going at it since they've been in the marketplace. And this is just another example of their competitive nature. Lyft sent a pretty strongly worded letter to Morgan Stanley accusing it of marketing this short sale product to some of its pre-IPO investors who were contractually bound by lockout agreements. Now we have Morgan Stanley, although they didn't officially, as is being reported, respond to that April 2nd deadline, which was contained in the Lyft letter, but they did issue a statement flat out denying the allegations contained in that letter.
So what evidence does Lyft actually have then to support this claim of interference? I understand you mentioned that New York Post article. How big of a part does that article alone play into this confrontation?
Yeah, that New York Post article, I think, was the catalyst for Lyft to take the action that it did in terms of sending Morgan Stanley that letter. Lyft said, look, we saw a 12% reduction in the trading of our stock after the March 29th IPO, and they're saying that that was because of this short sale product that Morgan Stanley was marketing to these, the special group of pre-IPO investors. I think what's interesting here is that we know Morgan Stanley is also the underwriter for the planned IPO that Uber has on deck for later this year. So some are saying there's some dirty tricks happening at Morgan Stanley with respect to its involvement with the ride-sharing companies.
Well, Areva, what stands out to me is in Morgan Stanley's statement, they say, well, we didn't market any of these products to people subject to the lockup agreement, which to me is them saying, yeah, we sold short some shares. We put together a swap. I don't know what you want us to do. We're an investment bank. Does Lyft really have anything other than to blame Morgan Stanley for bad optics if, in fact, Morgan Stanley didn't violate any explicit agreements, but did, in fact, offer swaps products shorting Lyft stock to some of its customers?
Well, that's a good question, Miles, and that's what Lyft, in their letter, they said, look, turn over everything to us. Give us all the documentation, sell it, show us what products you actually were marketing, and give us the names of all of the investors that participated in the sales. So it looks like at this point, maybe Lyft is on a little bit of a fishing expedition. They saw this New York Post article. It alarmed them, it alarmed their counsel to the point where they felt the need to write this letter. But it seems like they need themselves more information. They need to do some pre-litigation discovery before they can actually move forward. And at this point, it's not clear if they will move forward with any threatened litigation because there wasn't an official response, as far as we can see, from Morgan Stanley to their, the threatened lawsuit that was contained in that letter.
Yeah, it's a juicy one. Thanks so much, Areva Martin.
Thank you, guys.